Hello everyone, George DeSantis here with the look at the market for the week ending March 11th, 2016. We will begin as we usually do by looking at the S&P 500 index on the monthly chart. So now we are looking at the monthly chart of the S&P 500. Um, First thing we want to look at is the relationship of the Kalman filter and the instantaneous trend line. Well, the Kalman filter is still below the instantaneous trend line, but if you notice the last 2 months, it's ticked up. So that is a good sign. Now, most importantly though, the current bar is green, and that's the impulse bar. You may recall, those of you who read Alex's book, this bar is colored green when both the inertia of the market is increasing, is trending up, and when the power of the trend is increasing, that's when that bar is green. He measures inertia by the slope of the exponential moving average, or in this case, the Kalman filter, and he measures power by the slope of the MACD histogram. In other words, it doesn't matter whether it's above or below zero, but once the histogram is trending up, as it does here, as it's doing here now in the month of March, that means that the power of this inertia is high, is increasing. So that's bullish. Now we still have the parabolic yellow dot above the most recent bar. So there is still some room to go here before we can declare that, we're in some major bullish trend on the monthly chart. And the other thing to look at is that the instantaneous trend line right here is probably going to offer some resistance. Right now, we close pretty much at that instantaneous trend line, just below it. We opened here and we closed here so far for the month. Now, at the bottom of the chart, the Elder Force 13-day index just crossed above the zero line to go into bullish territory once more. So on balance, the chart is beginning to look much more bullish than it was before. We had this hammer that I mentioned for a couple of weeks now, and now we have this impulse bar that is green. Let's take a look at the weekly chart. Now we have the weekly chart of the S&P 500 here. Let's take a look. First of all, the instantaneous trend line is still slightly above the Kalman filter. The Kalman filter is fast approaching it though, so it is quite possible we will see the Kalman filter break above the instantaneous trend line to signal a change in the direction of the trend on the weekly chart. Now, the next thing we should note is that the parabolic, that yellow dot in the middle of this bar here, this candlestick, the parabolic has been hit last week by this candlestick or price bar. So it is likely we were likely to find that the parabolic goes below the next price bar, indicating a reversal of the trend to an uptrend by the parabolic indicator. So we have indications of uptrends on a number of indicators here. The next thing we should look at is that there's resistance. There was resistance. There's a support resistance line at approximately 2000, 1993 to 2000. Well, we closed above that line, and so we are now in a position to see whether we can continue any higher from here, and that will be determined, of course, in the next week or two. Now, below that, we have the RSI with a period of 12. RSI just broke recently, a couple of weeks ago, above the 50% line, and that is a pretty bullish indication, although the bullishness started way back here when it crossed above the 40% line. I think I mentioned at that time that you hardly see a cross back above the 40% line in a downtrend. So it is an uptrend. There was an uptrend started there February 11th. Now MACD continues to trend up and in fact is now in bullish territory at 5.29, plus 5.29 in bullish territory. We can see MACD, the fast average, closed above the slow average. At the bottom of the chart, percent R crossed above the 50% line, which I've mentioned many times. I tend to find is a very good marker for a shift in the trend. And so we have another indication of this uptrend being pretty good trend. So all in all, we have some nice bullish indications here, and we wait now to see how far this trend will go. Now, if you have, of course, if you have positions, you want to either um, tighten your stops, and I'll discuss why later on the tree line chart from Best Choice. So let's take a look at the daily chart. On the daily chart of the S&P 500, some interesting things to note. Since the Kalman filter crossed above the instantaneous trend line all the way back here, probably around the 15th of February, it has continued to trend up above the instantaneous trend line, confirming the uptrend. I have plotted the retracement levels, the Fibonacci retracement levels, 618, 50, and 38.2. Now, we broke above the 38.2, we broke above the 50%, and we broke above the 618 level. Now, we gapped up actually on Friday here because this is a daily chart. So that is a good indication. As far as parabolic is concerned, parabolic also indicated an uptrend on the daily chart when it dropped below this price bar here. It continues to remain below the most recent price bars. So we do have this nice looking daily chart. And now we go to the Jerry Appel's sum of the rate of change, which I know he had talked about it on the NASDAQ, but I figured, what the heck, I'll put it on the S&P and see how it looks. What does it tell us, you know? Well, here it is. Since it broke above the 4% line, as Jerry indicates, we should look at the 4% line. It's had some meandering here, some up and down, but now it looks much stronger. It came back to test the 4% line, and now it's trending up again. So that augurs well for the future insofar as this bullish trend is concerned. Now, MACD is still above the zero line. This little pullback here is not very significant. You don't have a divergence, so we shouldn't be too concerned about that. At the bottom of the chart, Larry Williams percent R with a 30 period, which is what I use. Since back here, it crossed above 50%. And as I mentioned before, we like to look at the 50% line for a switch in the trend. And since then, it's gone above the 80% line. These numbers are reversed on some charts, some software, but it's the upper line here. And now we have pretty good momentum on percent R. So all in all, the monthly chart of the S&P is looking like it's turning around. We have a green impulse bar. We saw that. On the weekly chart, we have an uptrend. And on the daily chart, this thing is looking pretty good too. Let's look at a few other charts that we usually look at. Now, this chart we've seen before. This is a weekly chart from stockcharts.com showing us the impulse indicator. The bars colored either red, blue, or green. Alex Elder's impulse indicator. On the weekly chart, we can see that the current bar is green. Since it turned blue here about 4 weeks ago, right, a month ago, that would be February 11th, the bars were blue and now they're green. So this is pretty bullish in terms of the impulse indicator is concerned. Let's change it to the daily chart and see what we find. Well, we can see that on the daily chart, we have not had a red bar since back on February 10th or so. We've had a blue bar and a number of green bars and blue bars and green bars. So this the impulse indicator is certainly pointing to the continuation of an uptrend. All right, so now I'd like to take a look at one other chart that Alex has talked about, and that is the new high, new low index. So let's take a look at that. Let's find it. So this is the chart that Alex had sent us back here in February. actually earlier than that, late January. He was anticipating this nice trend that we've had here, because remember he said that when this new high new low index drops to this very low level and goes back up and crosses back above the minus 4,000 level, we are likely to see a nice uptrend, which is exactly what we're seeing. Alex, a pretty sharp guy, does it again. So we do have a nice looking chart here with the new high, new low index. One last chart I'd like to look at today, and that is the best choice three-line chart, as I call it. It's a measure of the volatility of any move. And right now we're seeing that the SPDR, which is an ETF of the S&P, is now at overbought levels. So having said all those bullish things about the market, here's a reason for some caution. We are at overbought levels here according to this chart. Okay, so whenever price gets to this 90% line, whether we're in an uptrend or we've been in this downtrend for a while, now we're going up. Whenever it gets to 90%, we have to be careful that we are likely to see a pullback. So we'll see how that plays out in the next week or so. Have a nice weekend. I'm going to take a break here. Go get some water. Have a nice drink. Maybe something else, a glass of wine. Enjoy the weekend.